Hey everybody, welcome back. We have a lot to go over. We can just see here from the S&P, relatively flat, which is not that bad considering what's going on overseas. China's absolutely imploding, but we are struggling up here, and I just think it's something that we should pay attention to. We're also going to talk about why we're struggling here. Just watch this area pretty closely. That 49.50, I'd watch that going forward here. I'm not really crazy about the action I'm seeing. One of the indicators I use, advanced decline relative to the NASDAQ. I'll show you this in a second, but I want to go through some of the basics. If you take a look at how we played out today, I'm going to get into this on a 5-minute chart, drop it down and just to a bear chart for a second, and just look at the timing here, which I think is pretty important. So you can just kind of see what happens here right off, right? That 10 o'clock where you had that PMI come out, and you could see when it was too hot, how we acted on that hot PMI. And you just kind of see how you're trading down there for about a half hour, and then you start rallying back up. But what happens right in here is the bond auction. So when we get to the place, the demarcation line, you can see the rally on the bond auctions, the coming down, and then we just kind of ripped. But this bar was really what was in control today. If you just kind of draw a line, a demarcation line is which I always tell people to do when you get economic data out, and that economic data moves the market violently, always move the top and the bottom of that bar, and it will just let you know where the players are. You can see that's right around where we closed. And you can see how that demarcation line, the top of that bar today, was just really a battleground all day. Wick City up here towards the end of the day, right? It's very important to just remember that. But what does all this mean? It means the data is saying that they're not raising rates in March. Things are a little bit better than expected. And it's kind of funny. We went from we need to cut rates because things are going to be so bad to, oh no, if we don't cut rates, the market's going to go down. So we're kind of all over the place, but I am seeing something that is a little troubling. So we're going to go over that in a little bit of detail here. But first and foremost, if you just take a look at how this is playing out, and I want to just show you something on the S&P in here. So this is something proprietary, but I'll just show it because I think it's pretty important. It doesn't always work, but you're getting a sell signal up here. So if you actually count off DeMark, you're actually getting a sell signal up here. You had one here before. Really just means exhaustion more than anything. If you find a reason why it's going to go up, I think that's really important for you to know. But, I try not to show too many proprietary things that I use on here, but that's pretty one you guys should probably be aware of. Because when you see things like that, and it's not that often, you're seeing one here, you're seeing one here, it means exhaustion more than anything else. And the NASDAQ is really showing some exhaustion signs as well. I do use that as a sign that's telling me we're getting exhausted. Now, exhausted just means that you're tired. It doesn't mean that you're not going to go up. It just means that it's tired and it might still go up, right? It's just understanding where you are in the food chain is really the best way that I can explain it. You can see the retest and how we bounced and how we're just sitting in here. But you are getting to a point where we're just not going anywhere. And what's happening is we're getting less and less names that are moving. We're going to get into that in a second because this is really important. But if we take a look here and we just look at the dollar for a second and just kind of pull this back, we're being driven by a couple really key things here. Number one, we're going to bring out the stool, and I think this is very important for us. So we're going to get into that. We're going to go through a couple trades here today. I want to show you a trading journal, and then you are going to comment below if you like, and you can tell me what part of this you want to see, what part of it you don't really care about. It'll help me out greatly, candidly. So we'll get into that in a little bit here. But really right now, the macro. And why is the macro important more than anything else than the fundamentals and the technicals? Something's going on with the dollar, and it really has to do with China. You have a lot going on in the regional banking space that no one's been picking up. We've been talking about this for days. We started last week with NYCB. I'm going to shrink that down. We're going to drop the simplest of indicators in here. We're going to drop a 200-day in, and we're going to get rid of the RSI, even though it's exploding, because I'm just going to clean it up just to make it so simple. You're back above the 200-day moving average, and you have a higher high. That's a confirm move. You need to stay above that for 3 to 5 days. If you do, you're back above the 200-day moving average after breaking back down here in December. You will note that if we clean all this off for a moment, get rid of this, make this bear, turn this into a line, drop a S&P SPX right here on top of it, you will note something very, very clearly, that when the dollar, drops, the S&P goes up. Conversely is also true. If the dollar goes up, the S&P drops. Should the dollar rally, you could expect the S&P to drop. Okay, it is very highly correlated. It is not that hard to see that this is how it plays out. Dollar does what? Drops. S&P does what? Goes up. Okay, it is not that hard to see. Here you are again. S&P drops. What's happening? The dollar's going up. Dollar drops. What happens? The S&P goes up. And we all know what happened here. It's when the Fed said we are no longer going to raise rates. So we are starting to see some of that here. This is very important for you to get this distinction. this specific distinction, and I'm leaving the dollar out of it, or apologies, I'm leaving the 10-year out of it. Been a long trading day. I'm leaving the 10-year out of it because the 10-year is starting to do its own thing a little bit. The dollar and the bond market and the S&P are highly correlated, and we saw that today at 11:30 with the bonds. To make it simple right now, stick with the dollar. I think it's just so obvious what's happening out there right now. And I would pay attention to that. But that breakout means that we're getting a little toppy. So what do we have so far? We have a sell signal, right, on DeMark. Whether or not you like DeMark, I really don't care. But you have an exhaustive move there. And now what's happening here? Okay, the dollar's going higher, and it's above what? The 200-day moving average for the first time with higher highs in how long? Okay, so when we're here, 1, 2, and it has been a pretty long time, but let's just go back and mark that again. So now we have a macro issue going on where, yep, we were over here, but now you've made a higher high. So that's not ideal. I've seen things ideal before, and that's not how they look. So what does that mean? Well, you might be going through a period of August. You might have some kind of pullback and consolidation. We just don't know yet. And this is something that we really have to pay attention to. Now, when we get into the NASDAQ's just grinding along. You get 2 great upgrades today on NVDA. And, this stock's obviously just rocking and rolling. We had a lot of great trades in there today in the community, just in and out all day long. It was actually a lot of fun to trade this. But we're really getting down to just a couple names that are going higher. And this is where the issue comes in. You're only getting a couple names that you can trade. We traded this, did exceptionally well with it, and just batted it around all day, quite frankly. Actually even started at like 5:30 this morning. So for time shake, I'm just going to show you this whole thing. This is from B of A right here. And I saw this at 5:30 this morning. Here is the timestamp. And there's the report. I read no, it's not inside information. It's called research. People think when you get this stuff, for some reason, it's called inside information. It's actually just doing fundamental analysis, guys. There's a huge difference. Huge difference. But at 5:30 in the morning, this is when I saw it on the tape and come in. Goldman did the same exact thing a little bit later. So I started getting involved, and I was just stating where I was adding at 7:05, using 7 as a stop. And we just kind of ripped all day with it. What was really interesting about their comments was this: $40 earnings power, $160 billion accelerator, or maybe as high as $80 a share by 27. Nobody has these numbers. These numbers are absolutely insane. Started seeing AMD do it, and so far I was up $7 on that trade, did nothing, trailing, just walking through it. And then it started to roll, and then I got out of it, and then we just started playing with it again. My biggest issue is just what's going on in China, and these are just some other notes. And then, of course, just the pre-market notes. And then all these fingers are when I'm doing trades, and then people are just there trimming when we started buying more NVIDIA again, buying calls, things like that, buying Google, et cetera, et cetera, et cetera. So let's get into it. So what's it doing after hours? You're moving up. I think it looks great. My concern is that we're now down to about 2 names that are absolutely flying. And when this starts to happen, there's a great saying in the market: they come for the generals last. It's really hard to look at that chart and not want to be involved in it, right? I mean, it's very difficult. Same with this. But when you start to see this stuff where it just doesn't matter, in every moment we're just going to go up $5, $10, $20, like it's just nothing. They're just going to keep going up. It is very difficult to just assume that this is going to continue. But it's also at the same time, it's very difficult to go out there and just say, you know what, I just want to be in a position here where I am going to, I'm just going to stay out of the way. And I don't really want to stay out of the way. I just want to trade it. So that's what we did a bunch of today. We just traded this around in and out a lot. And we put this one out there as well. It was just pattern after pattern. You can see right here. It's a 3-bar hourly pattern. We were in it before, we traded it out there, and then we had our levels, what we were watching on NVIDIA for NVIDIA to push for the second time. You'll note that all these pushes happened right after that 11:30 bond auction, and then it was just straight there from that 11:30. It was just straight up. Why? Because they liked the bond auction, so they were trading tech. And here, like when I was up $15, it's just getting silly. Like every time you're just turning around, you're pulling out $15, $20, like every trade on SMCI. I'm not going to not do the trades, but I certainly don't want the overnight risk the same way. You can't possibly look at this chart on any semblance and say it's the same trade here, right? Or even here as it is up here. It's just not realistic. You know that there is something out there. Now, if we were broadening out and the market was broadening out, that would make me feel a little bit warm and fuzzy. And I just don't feel that way. And I really like these names a lot. And I do own NVIDIA and I do like the names. But it's very difficult to look at this and say, oh, I'm really comfortable going home overnight, tech being all the way up here. It's very hard to say that right now, and I'll just give you a couple examples. I mean, everybody that's been following us for some time is aware of what happened with NYCB and how they're having a massive issue right now, right? And we can see how this is doing after hours and how we just took out a new low. I don't know what's going to happen here, right? I have a short position in this. We've been talking about this for some time. We've been talking about KRE and how regional banks are continuing to roll over. DPST was one that we were trading. But overall, I don't know if I'm going to walk in one day and just have this halted and then there's just a panic and run on a bank. It seems like there's some issues there also with China and Evergrande. I'm not really crazy about what I'm seeing there now that they're allowed to liquidate. And I'm really surprised in the REITs. The REITs are kind of holding in there. And I think that what we're going to find out here, if we put the simplest of indicators in, is that Evergrande, like most of these bankruptcies, they don't have what they think they have, or those assets are not worth what they think they're worth. And that becomes a real problem when it becomes to liquidation, because then everybody that's in commercial real estate starts marking the market, and then the banks could have a problem. That's out there. That's an issue. There's another issue that I think that warrants our attention. Now, I want to be really clear about this before we begin. Overall, I am very bullish on tech long term. That does not mean that we're going to just go straight up. That does not mean that we're not going to have an issue. And it does not mean that you're not going to have pullbacks. Okay, those days are over. The fact that you ever think you're going to see this again, quite frankly, with the NASDAQ, and what you're looking at here is, in black, is the advanced decline line of the NASDAQ. And this is something that I created that's proprietary. I'm trying to figure out the best way to share it. But so you have the advanced decline line here, and what it does is this is in relation to the NASDAQ itself. So we know what the advanced decline does, right? How many advancers you have versus decliners, and then you put a number to it, and then you plot that number, and then you look at that number relative to what the NASDAQ's doing. They should be in tandem. They should be in tandem. When they're not in tandem, you have a little bit of an issue. Now, I'll just show you this, and it is what it is, and don't shoot the messenger and say, but you said we're going higher. I'm going to trade what happens. See this right here? And you see how you're hitting a lower, okay, on the ADL line, advanced decline line. You see how you're hitting, let's change the color of this. See how you're hitting a higher high there on the NASDAQ? Okay. This is an issue. All right. That was an issue. And that led to what? Now, why does that happen? Because 2 or 3 stocks cannot lift the market up, right? There's the saying again. What's the saying? They come for the generals last. And so that's my concern. I don't know what they're going to do with SMCI. They could gap it up another 10, 15% tomorrow, right? That's why going home short is crazy. Owning puts, not so much, because at night, if you like what you're seeing after hours, you could buy stock against the puts and just hedge the risk. Come in the next day, sell the stock. You still have the puts. If it reverses, you have a free trade. I did that a lot last week. But nonetheless, let's stick with this because this is really pertinent. And then we'll just make this one red as well. Okay, so we have divergences that are going on here, meaning the market's going higher, but the advanced decline line is dropping. That's not, again, where you want to be. Now, the exact opposite was happening here, and you should be able to see this, and we'll zoom in on it, but you can see right here, okay, how during that period in time we made a lower low, but what happened here? Make this purple. You had a positive divergence. In other words, while the NASDAQ made a lower low, we didn't have, the advanced decline line did not. This is pretty substantive. Why? Because this tells you more of a long-term trend, what's going on under the hood. You should not sleep on this. You should pay really close attention to this and watch this. Now, what I did was I just took screenshots of it so that we could watch it and just look at it over time. And then you can go back. We went back about 10 years there, and you can start to see the divergence here. And you can start seeing very clearly what we were just talking about, right? And you can see these levels in 23. You can see a little bit of it right here in that little spot right there where you made this lower low, and then this made the, the higher low. And you can see right here what's happening, and here, and you can see it a little clearer. All right, same as you can see this, and you can see that, right? All right, you get it? This is something that you don't want to sleep on, and as I go through these, it will become clearer and clearer until it becomes, as people like to say, absolutely glaring, and that's what you want to be aware of. You want this to be absolutely glaring what's going on. You want to be fully cognizant and fully aware of what's happening. I don't think that this could be, to me, any clearer as if you looked right here at how that's playing out. And then if you looked here, how that's playing out, this, how that's playing out, this, how that's playing out, okay? You don't want to sleep on this. This is something that you should be thinking about. This is why I always say to people, and I'm going to bring this up before we start looking at a trading journal, people always say to me, oh, you're a day trader. And that's not the case at all. The way that I look at the market is like this, and I'll bring this up as a circle to kind of give you an understanding of this. So if that's well, we're going to have to make that stay in place, aren't we? And I guess what we're going to do is make that a circle again. Bear with me, guys. And we'll make that a circle here. Just leave that there for a minute. And what I always try to explain to people is That's not really the case. I trade what the market will give me. So if this is my entire assets or capital allocation, this portion in here would be what I'd be day trading. Then this portion in here, roughly, is what I would swing trade. This portion here is what would be long-term, and this would be special situations, M&A ideas for cash, or even option trades, which actually could even be a separate category. But as time goes along, these lines in here, they will shift, meaning I will shift a line this way or a line this way, depending upon what's going on in the market. So one of the things people are seeing that are newer in the community right now, they're saying you're doing an awful lot of day trades. This is one of the reasons why I'm doing a lot of day trades. The overnight risk really scares me right now. It's between what's going on with China and the global market's not responding to it, the complete lack of disregard for what's happening in the regional market is driving me crazy. And there it is, really zoomed in. But what's the complete lack of regard for this and what's happening in the regional bond market? Oh, it's just this bank. Let me go show you this before we go on and we go any further. So here's one of the things that's very troubling to me. So we can all see back here, and let's make this just a bare chart, so you can understand where my issue really is coming from. I like this bank a lot. They got stock here where everybody was crazy for it. Everybody wanted stock. They couldn't get enough stock, right? Because they were one of two banks, this and SMCI, that were allowed to do what? They were allowed to buy assets. No idea why this is so slow tonight. And you can see how that one's responding without a care in the world, right? So the question becomes, is this something with NYCB where it is just their issue, or is it an overall issue with the market? I don't have a clue yet. But the way that this is acting and the way the KRE is acting, that is not acting like it's a singular issue. REITs are acting like it's spreading. You can see the 55 here, you're unable to hold that, and you've been unable to hold that. Between Evergrande, China, and regional banks having issues, and this was another regional bank that had a really bad quarter and was coming in. Now, why is this an issue? Because when the 10-year was higher, the problem with the 10-year was this. Well, it's going higher, but they're going to cut rates, or they're going to stop raising rates, and that's going to make everything better. We're having issues with these regional banks. Just follow this line of thought for a second. And bond prices are rallying. We're having issues with regional banks, and bond prices are rallying. What's going to happen when the bond market goes sideways or up and yield goes higher? How are we not going to have more issues? It really defies logic. And the fact that no one's talking about this and Powell's like, oh, it'll be fine. Maybe it will be fine. But I just don't see how this is not making more noise right now and how this is not making more news. And so that's kind of the thing out there that does scare me a little bit. Let's take a look at some trades. Now, in front of us is this app. I'm even leaving the website right here so you can see it and the dates and everything that is on here. And the reason I want to do this, and bear with me, I'm trying this camera out. It's a standing desk that goes up and down. So I'm trying this different, and just bear with me as we get through this. But I want people to get this before I start showing data like this, so you understand what I think is the important part of this data. This is TradeZilla. So I used to keep my own spreadsheets. Quite frankly, I have for over 18 years. And even when I work with people, if I was doing one-on-one stuff, I would have them do it. I have no affiliation with this guy whatsoever, or this company whatsoever, but it's a really good product. I would strongly suggest if you're struggling, you journal. Whether you use this product or another product, I use this because it's the easiest one, and I tell people when I'm working with them to use this as well. It's super, super simple. That said, let's get to it. So what I want to do is just show you the basics, and then you're going to comment below as to what you want to see, what you don't want to see, and what would be helpful. So this is from the RIP to where we are today. I don't believe Friday is loaded in this. And I want to be really clear about this. This is one trading account that is doing one kind of trading. Okay, this is a pretty aggressive account that is leaning towards day trading and very short-term swing trading. Okay, other accounts are run differently. But I want to show this one because this is the one that I utilize the most when we're in the room and I'm implementing trades that are in the community. This is a function of how much money is in the account, right? It doesn't really matter. Okay, this account I think has a quarter in it. I can get an exact number on when it started with January 1st, but it really doesn't matter. What I want you to get across from me before I get into the numbers, the average win-loss ratio is right here. So if I'm making 980 on a trade, I'm only losing 500. Okay, these are things that you as a trader need to know. You need to know this. How much do you make on your average win, and what is your average loss? So if you take nothing and you're like, I don't want TradeZilla, I don't care about your numbers, you want to take this from it at least. What is your average win? what is your average loss? Please take that from it. I want to comment on this trade win ratio, 55.91. Okay, from Jan 1st to here. These people out there telling you they're 60, 70, 80%. Okay, Steve Cohen's best trader is like 62%. It's not realistic for any period of time for you to get over 55, 60%. It's just not. It's just not realistic. So what you're shooting for is anything north of 50. Okay, so just remember that. It's not that, it's what you make on your winners. And so what you're seeing here is that the profit factor every time, you want this over 2. So if I'm at 50% and I'm at 2 to 1, you're going to make money. It just becomes a function then of how much money is in the account. You might want to listen to that again, right? As long as you're at over 50 and you're at 2 to 1, everything else is nonsense. All the ideas, you got to be in this stock, that stock, everything, it's nonsense. All that matters is that the math works, right? Trade expectancy is every time that you're in a trade, what do you expect to win? And then this is what that accounts up. That's not really the relevant part of this. What's relevant for you guys is understanding what is your win rate, okay? Did you win the day or not win the day? I also look at that. But if you want to get into this, and I think what's more important about this is what a month looks like. And what you're going to have on these months is you're going to have this in a situation where, yeah, I actually do have red days. I actually do have days where I lose money in a day trading account. I know, shocker. Very different than the people that rent Lamborghinis on their YouTube videos. But if you look at this kind of stuff, okay, you're going to have days where you lose money. And you're just going to have to realize that that's going to be the case. I don't think they loaded today in yet. Let me just click over. No, today's not loaded in yet. But again, this account's run somewhat aggressively on the day trading side. I'll get to this. These are some of the meta trades that we did. But I'll get to that in another video. If this is of interest and you want me to walk through this, I am more than happy to. For me, what's important is that you get that not only you're going to have winners, but you're going to have losers. But I can drill into all this stuff and I can show you the losers. I can show you the winners. And we can kind of go from there. Like here's 20, that was locked in. But like with this kind of stuff, what's interesting about it is this. So when I say things along the lines of, yep, I'm in these trades, or let's make this a little bit long, let's go to a 10. What I like about this kind of stuff is this. You can see all the trades, right? So and I can outline why I did every single one of these. I could do videos on these and educate you so that you guys can learn to do it yourself. See how I'm selling up there? Who can sell at the top? I can. So the purpose I'm getting at with this here is this. When I'm telling you this is the kind of market you're in, that it's a trading market, I'm not holding NVDA in here and holding this huge position in NVDA, right? I think it was like 4,100 shares at one point. I'm not doing that. I'm in, I'm out, I'm bobbing and weaving, I'm hitting singles, I'm reducing the exposure. I have less exposure up here. I have more exposure down here, right? I'm picking spots to add 500, 200 blowout of some on these peaks. I'm selling into positive slippage. I can walk through these trades and show you how to do that, okay? Where you're looking at it from, you want to go through these levels too. I want to show you like losses. You're going to have to go through, we're going to have to talk about losses. Here's 200 shares. We lost money, right? So we're going to have to go through the losses too. Why'd you cut half here and not? But what we want to do is we want to take a look at the losses. Why was that a loss? Should you have cut the whole thing? Right there. Why did you hold half of it? Because I was trying to build a position and then it just went against me. But this kind of stuff's important for people to get. Most important thing that you should take from this, that you understand exactly what your win ratio is, right? How much you're winning, what your profit factors is, and your trade expectancy. But I'm more than happy to go through these trades. I'm also more than happy with this account. If you want to see the actual timestamps of all the trades, I really don't care. I really, truly don't care. If you find that helpful, I'm more than happy to load that into an Excel and go to town. But I do think that the response that I've gotten from showing the room and showing the one account, I did get a pretty positive response on that. Not so much from the fundamental side of the money, but from the side of, hey, this is something that I could utilize as a tool so that I could start implementing your trades when I start seeing how you trade. So I hope you found this helpful. Please comment below on this. Now, I will get asked about this because people love this name. They absolutely had a solid quarter. The conference call is over. I have not listened to it yet, so take this with a grain of salt. But here are your levels to watch. You can just screenshot those if you find those helpful. You want to watch that 2023 and just watch that and go from there. Key takeaways today that you need to be aware of is that the breadth is just really starting to get bad. But candidly, we don't know how this ends. And if you start looking at how some of these things are trading, SMCI is just chugging along up here. So something else to consider when we start looking for tomorrow and we start looking for the winners for tomorrow. Now, besides those, remember, Lilly will be out tomorrow. You can already see that there is massive anticipation for Lilly. Spotify will be out tomorrow as well. And you can see that you have massive participation there. And Tesla we should talk about, because Tesla in and of itself is absolutely cracking here, and you are at a huge demarcation line. This is a massive, massive neckline for Tesla. Left shoulder, head, right shoulder. Tried to crack here, didn't come back, developed the right shoulder. That shoulder looks like you're getting ready to roll over here. You really need to hold this level. If you don't, this can get super ugly, super fast. That's it. Please comment below.